And we are now live, and we just had the PPI data come out. Judging by the market's reaction, it looks like dollar strong type news. So I've got my eye on things as we go through our destruction. Wow, as our discussion today, I'm going to be looking for some potential shorts. So yeah. As a matter of fact, I'm going to set some alerts right now. As of now, give me 1 second. I'm going to set an alarm here. Crossing the array at, I can change that. Okay, so, all right. And we'll fix the coordinates of this array. Okay. I'm just setting an alert on one of my new test algos. And we'll see how that goes. All right. Okay, well, I know that Brad King was going to try to make the live shows. We're just talking about that in the Discord. And for those who are new or not part of Algo Factory, you want to find out who we are, what we do, just go ahead and follow this link, this QR code. You can zap it with your phone or just go to www.algofactory.tech. And we'll get into more of who we are and what we do towards the end of the show here. But to very quickly say it, we help people become traders and eventually make their way into programming algorithms that can trade for them. It's a pretty cool. We'll use the term technology that we're working with. At least methodology is probably a better way to say it. Either way, come visit us, check us out. I'm going to go ahead and share the screen so you can see the reaction to the news. I imagine the gorilla will join us shortly. Fashionably gorilla late. All right, so yeah, definitely a hard spike down on the 5-minute chart. So let me clear up this chart a bit so you guys and gals can see it. So the news here caused the candle to definitely take a strong wick down, but it's already back up. And just so you know, all this chop right here, this chop indicates a place where the market is just very, it's just consolidating. It's trying to make a decision which way to go. Okay, and that's let me see how it is on a higher time frame. So which one is this? Yeah, we'll skip that, and we'll close that. I'm trying to look at my broader trading panel here. We'll skip that. Actually close that. Now, it looks like I've closed a lot of my higher trading panels. Let's see. This might be it. Nope. I'm going to have to open up a fresh one here. Sorry for the delay, everybody. Been kind of working with a new algo, so a lot of my old charts are sort of not there. Here's one. Okay. Let's take a quick look. The gorilla will be on for the private show at 9. So we'll see him then. Okay, that's good. So let's look at EURUSD, which is a good, kind of basic, widely traded animal. Bullish. Okay, so basically, the dollar, as I can see right now, is bullish high time frame, but it is in the middle of a period where the euro wants to kind of pull up. At least it has been, but that pullback might be diminishing. So let's go to a lower time frame and see what that looks like. I say lower, I mean lower than super high. So this is basically a daily time frame. So I wouldn't call this a low time frame. But you see a very strong, since July, the dollar has been strong, which has been dragging the euro down in comparison to the dollar. Okay. And right now, the charts do call for the euro wanting to kind of pull up. But what may be happening here is just we have this support right here that technically has been broken. But then we have another support here that, it's been broken, but price went back above this old kind of pivot point back here in price, where price came down and came back up. Those are called pivot points. So price is now above those pivot points, right? So what may happen here is that according to the higher time frame algos for my basic kind of wind tester algo, know the which way the wind's blowing, which is the chart you're kind of looking at right now. But that I before I cleared up that chart with all this gobbledygook, I'll put the gobbledygook back on here. That's the gobbledygook, okay? And I look at it on numerous time frames, which is this look right here that you're about to see. So that's the high time frame look, or the multi time frame look of the gobbledygook, right? I can read that. It's a lot of noise. I wouldn't recommend anybody looking at that. That right there, I mean, I'll look at that, but I usually break it down and clean it up, and then I really get a good assessment of what's going on. So now these lines I didn't draw as a prediction. I'm not that accurate. I wish I was. Sometimes I am, but 90% of the time it's not like this at all. That's just me demonstrating a downtrend on a prior show. So don't think I'm that amazing, although sometimes I am. What's probably going to happen, I think, and I don't know for sure yet, but we may see price kind of consolidate in an area, and it's hard to say what that area looks like. That area could be demonstrated by using this impulse down, and now that price is kind of out of support and might take some time to decide what it wants to do, we can kind of use the 618 as a guide, because what I just put up here is called the Fibonacci retracement tool. And these levels, it might, if you can see it on the screen, 786, 618, 382, ignore the 0.5. That's not a Fibonacci number. It's just on there. So 382, 786, 618, these are numbers that price likes to travel to. Whenever it goes down, it goes in a straight line. That's called an impulse. Whenever it moves in one direction almost exclusively with very few significant pullbacks, that's an impulse. And we've seen a large impulse down. Now price is kind of hitting these areas that are prior pivot points. So those prior pivot points are going to provide support. And as that support is hit, price may actually stay above that support for a time. It may dip below it later. I think it will. But for now, I think we're at a point where price may kind of hang out above that. Now, will price go any higher than it's going right now? Well, some of the points we're looking at where price might go and then not go any further going to be around, not at, but around this 382, the 618, and maybe the 786, right? And then what we can do is use a different tool to take a look at where a lot of trading has happened before. It's called the fixed range variable profile. Okay. So if we use a fixed range tool, or volume profile, not variable, we can measure that same exact impulse. And these bars that come out are telling us where a lot of trading happened. There is a block to which price will be attracted here. Most of the price action is it's going to be in this area. Price is going to be really attracted to this area, but it might not make it up there. Of course, that is around that 618. It might be kind of hard to see right now, but because it's blocked by price action. But this line that we drew before is a 618 up here. Okay, so and then of course up here is the 786, which I drew a line up there. There's not a lot going on up there, so I wouldn't expect price to make it up there. So now the areas where price might get rejected are the opposite, where there's a kind of an empty spot in this fixed range. Let me zoom this in, make it a little easier to see. Okay. Let me clean up some stuff on the chart so that we don't have so much going on. Okay. All right. Okay. So this area here that I'm about to draw a box and to kind of extrapolate, this area is where price will want to reject. Okay. And I'm going to code that differently. I'm going to code that with an orange border. So price, what could happen here, and it really depends on the higher time frame. And the algos are going to give us some clues, but the price action is going to give us clues sooner. However, the price action can be, it's not, nothing is followed 100% in trading. So price action might say there's supposed to be rejection, but it never happens. So what we might see is price kind of bounce around, maybe make its way up to here, and then make its way down here, and it might break below that, or it might keep bouncing around. for a while. I mean, it really depends on a lot of things, but mainly it just depends, I think, on the bears and the bulls at this point. We've had our major world event, and I don't know if that world event is done. I don't know if we're going to see. I don't know if the markets are going to see anything unexpected from that. I mean, that's no one knows. That's why it's called. It's unexpected. It's the term for unexpected. But it wouldn't surprise me, at least in the midterm, or maybe the next month or so, for price to kind of hang out in this area, anywhere bouncing around between the bottom of this, where this blue box is here, to the top of where this orange box is there. Price could bounce around in there, and a lower time frame algos are going to give us clues. And that's why I have, sort of this choppy kind of look right now. But that can change too. I mean, you can see that there actually is right now where price is. If you look at the volume profile, there's also a gap in here. Price right now is at that gap and could simply bounce down, right? See back here. So we are looking at some definite, some possibilities. And again, the algos are going to give us clues. I'm going to look at that next. So we got Lisa Gray in the house. Fibonacci looks better than a Jackson Pollock painting. Yeah. Nice reference there for the insiders. I definitely, I mean, look, Jackson Pollock's work is not all bad. But I'm more of a fan of classical art. I like art. I like Rembrandt. I like Monet. I like art back when it was art. Now you got Jackson Pollock throwing paint at a canvas, and my sister can paint like that. I mean, I know there are probably a bunch of art aficionados with their ears bleeding right now, and there's some work that Pollock did that actually was pretty good, really good. But those paint splatters, I can't get behind it, man. That's that my 8-year-old niece can paint like that. I know, I'm sorry, but the whole art world is going to tell me to eat it. But that's just how I feel. I doubt you have any high level art people watching this show, though. And if you are, then fire me. I don't care. All right. So, short term, though, I think my assessment here of this sort of, I think it might be shorter term than this, but I think we're going to see a choppy move up right now. I know that there wants to be a sort of rejection at the very lower time frame, but I think at least for now, at least the next week or two, I think we'll see kind of choppy moves up in the euro, choppy moves down in the dollar. But you know what? That can change so quick. So that's why we use algos, to kind of do a play by play. My algo I'm looking at right now trades on the 5-minute. So all of these things right now are just which way the wind's blowing, because this is on an 18-hour time frame, right? This is in a higher time frame. So I have something trading in a 5-minute, so that even within these movements that we see, there are trades that can be accomplished, right? So, and to take a look at that, even we can throw some of the noise back on the chart and go to, say, like the 30-minute time frame, and you'll notice that there wants to be, I mean, everything is in a conflictory position on these charts right now, but you have the daily where price wants to head up, and then you have the 3-hour where price actually wants to kind of head down, and then you have the half hour where everything wants to head up. So this is just going to make for just a bunch of choppy price action. And for the moment, I do think it's going to be that kind of choppy move up. That's what I think is going to happen. What's this? What's this alert here? Let's drop that alert. Let's see what that is. Hold on a minute. I've got an alert here I need to investigate. May have put one up by mistake, although it's probably not likely. Okay, so Katie Cross or Elegant Long. All right, let's see. Well, that alert should have been triggered. It's in the 3-hour. Okay, let's roll over to that real quick. Okay, that's a legit alert. So we don't even need Katie Cross. All right, so yeah, we have actually, so the move's probably going to be up. Right now, price is super choppy on the low on the 30-minute time frame. So let's take a quick look at this, and we're still investigating the euro. Just a super choppy move, right? So this is a retracement, and according to this kind of 30-minute day trading time frame algo, things look like they want to head down, right? But the reality is that just above that on the 3-hour, things want to head up, and on the 18 as well. So right now, price has this downward action on the lower time frame, but the higher time frame is pressing up. So what you're getting is a compression of price action, and until price breaks out, we don't know what's going to happen. And we have a lot of news right now. So the breakouts could be false. Like we just had a false breakout to the bottom because of the news. If you were not watching the news and paying attention, you would think that we just had a breakout to the downside and want to trade that. And yet you got robbed, right? So let's just say, okay, we covered this last week, right? You have consolidations and breakouts. So you can see it on the chart, and you have a consolidation, and then you have, let me recode this to the normal colors here. You have a consolidation, and then you have a breakout, right? You have a consolidation, and then you have a breakout to the upside on this case. You have a long consolidation longer here, and then a breakout to the upside. And then you have a news event that caused this crazy price action. You have a consolidation and a breakout to the downside. So, I mean, you need breakouts for the most part to trade, especially in an illiquid market, which we're kind of seeing right now. And we're in a pretty long consolidation right here. Pretty long. That's considerable. So what happens is the areas of interest after consolidation are going to be just outside of said consolidation, right? And we had a false breakout to the top and a false breakout to the bottom. So the question is how did I know not to trade these, right? How did I know not to go short on this, right? So, well, for one thing, I probably would be looking to go long. However, I didn't go long here. I could have gone long there, but I did not. And had I gone long here, I would have been stopped out probably by the news. Well, I knew not to trade because the news was coming. So let's take a quick look. I might be migrating to a different news um, uh, provider, but this has been working pretty well so far. So I'm going to go ahead and just continue to use Forex Factory. Yeah, Hippocratic Oath. That's one thing I've always. I mean, look, Jackson Pollock's work. A lot of that, paint being spilled on canvases. I mean, sure, I'm sure there's artistic talent to it, but some people think that three-letter agencies use that as money laundering operations, and I mean, it makes an awful lot of sense to me. Who's going to buy a bunch of paint splatter for $20 million? Seems like a way to launder money, personally. Um, so and that entire discussion was started by some painting going for $45 million. That's like, I mean, it was painted in the 50s. It looks like a Ukraine flag. And so now it's going for all this money. And it's just a giant canvas with two different colors on it. I mean, anyway. All right. So back to the news. We have today PPI, which is this is basically inflation on the production side of things. So the inflation numbers, the PPI, looks like the numbers were up and higher than expected. This is a month-over-month number. So the increases were higher than expected, which is an indication of strong dollar, meaning that if the inflation is still happening and going up, then Powell and his ilk are going to want to hike the interest rates. That's how that works. And there's a good chance that the CPI, which comes out tomorrow, is going to reflect similar numbers. By the way, just a quick break off, everybody. I know we have a few people viewing live. Like, subscribe, follow, do all that. And even if you're not viewing live, if you're just kind of looking from a different standpoint, do that. And then, of course, we have FOMC minutes today. So why would I trade a very illiquid market, especially when I know that these data are coming, right? It's just going to, by chance, knock me out of my trades. It's almost what it's designed to do. So some of this data almost doesn't matter. What matters is for the data to come out, and then we trade. At least I trade after the fact, after that data is out. That's how I roll. So then, of course, we have the data tomorrow, CPI, unemployment claims. Unemployment claims is weekly, but CPI is monthly, and those are big. This is big data, and I think the trading today will be funky. I might be able to get in some day trades. I have alerts set for it. Might even happen during the show. So that could happen, but for the most part, I think today is not going to be as much trading as it is studying, and then we'll see about it. And then tomorrow, CPI 6:30 a.m. Once that's out, I think a lot of money that's sitting on the sidelines is going to jump back in the market because the only thing we have left is consumer sentiment on Friday. Again, that's going to happen 30 minutes after market open. Add some spice, some volatility and spice to the day. Just like tomorrow's CPI is going to do an hour before market open. So, that being the case, back to the charts, right? So, you know, the higher time frame says that the wind is blowing to the upside for the euro, downside for the dollar. The data that came out this morning was more of a dollar strong situation. Given the data is oftentimes questionable and fudged, I would consider that data just a kind of a way to divert against the way that everything is really going. Now, it doesn't mean the price won't dip down temporarily, but I think the end of this consolidation has a better likelihood of heading up. However, until it heads up, then there's not really, you know, um, anything I could do about it. So, yeah, and I might even find a day trade on the way down, because I'm looking at the algo right now, and it's dicey. It's a dicey trade. I don't know. We'll see about it, right? I mean, we'll just see about it. I think we gotta change this here. Well, let's just cancel it for now. All right. So, but that said, I mean, technically, nope, that doesn't work. All right. Yeah. So my trade was invalidated as it should be. So my algo is has auto invalidations, right? And it's no longer valid. So I won't worry about this alert. Just delete it. Unfortunate, but it is what it is. That said, we are getting towards the end of the private show. I've got Jay typing. We'll see if he's got a question. And this is a good time to open it up. 2 questions. Even if you are watching on YouTube, I know you're possibly not a member. But if you are, go ahead and ask a question. We might even be seeing our breakout to the upside here, actually. My area of interest is going to be probably above here. Yeah. I mean, it's, a little dangerous. You have this bit of structure right there with which one must contend, but it does seem as if the way to go is up at this point. The morning data has probably given us our downside. It's such an illiquid market. The price can, head back down. So I might be looking for a move up, a breakout. We might have seen it already. So let me open this up a little bit so it's easier for the audience to see. But you see this candle right here. You had our move down, news based. You had a breakout to the upside, and then price rallied down, and then now is pushing back up. So, the thing is, it's not truly broken out. I mean, it's broken out of this basic area of interest, but I'd want it to break above here before I got terribly interested in trying to take a long trade. And then, of course, I have to assess everything at that time, but it's very well could be the trade. Oh, here we go. All right, let's make ourselves a stop loss below this rally point. Okay, let's see if we can get ourselves a little money. I'm going to have to zoom the screen a little bit because my trading panel does not work at this resolution. All right, let's see. Okay, stop loss is ready. And this will be a small entry due to the illiquidity of the market. And of course, I'm going to have my eye on this level right there because of the, that's a structure. This is a pivot point. So in looking at this chart, if I decide to go long here, I'm always going to have to be careful of this structure point. Let me show you right here. So that's a pivot. Price headed up and then reversed back down. And as that happened, buyers and sellers came to a, we'll call it a disagreement and agree to disagree right here. And as that happening, you have a lot of people making decisions around that point. And there's and more importantly, there's a lot of people not making decisions above that. And that's what's really going to kind of make the difference here. So got to watch out for that. Let me take a look back in time. Okay, so we got this structure here, but that's all right. That's actually old news. The structure is more important than that. But as you can see, price is having trouble rallying above here. You see that? It's rejecting at this. So for me to want to go long here, it's dangerous. It's a dangerous area, and the market really hasn't uncoiled. Part of the danger of trading today is there's a lot more news coming in 5 hours. at what is that? Let me see. So it's 9 a.m. now. So EST. So I think it's 2 p.m. We expect to see the FOMC minutes. So the FOMC minutes, those are basically that is a recording of the Fed Open Market Committee meeting that described the recent rate decision, and I think it was either a pause or a hike. I don't know. Half the time, I almost don't pay attention anymore to what the result is. I know that's terrible. It's like the most important news, but it like doesn't matter now. That was like a week ago. So whatever comes out during that that FOMC minutes, that can actually go against what people are thinking. So it's not wise to base the FOMC minutes on what happened the week before with the FOMC decision. It's unwise. I mean, there is a probabilistic scenario, but trading is already riddled with probability. So if you stack probability with probability, you're diluting your risk to reward ratio. So for me, it's almost better to wait for the news to just pass and then go from there. But at this point, we are approaching the end of the show. So let's see if Jay had anything to say. Jay says, if you have an indicator that picks near perfect, but the situation doesn't happen enough to make an APR, I don't know what APR is, and that means that even a high risk to reward means very little. What basic strategies can increase it? I wish every trading indicator had an APR percentage on it. APR like annual percentage rate. Ideas, lower time frames, just change indicator values. Jay, you watched me do this for a while. I use high time frame filters. That's what I do. So we'll assess that. I mean, Jay, you really know what the thing to do is, Jay. Go ahead and send me a copy of your chart with your indicators, and I will go ahead and take a look at that on the show, and I can spice it up. That's the best thing you can do. And I think you are somebody who I've not done that with yet. Just so you know, everybody, before we hop on to the private screen, the private deal, and we leave the YouTube, understand that once your trading method, right, has been kind of tested a little bit, say to 50 back tests, and you can, back test is something you can look up. It's basically what we do to simulate trades in the past, right? And once you've gotten to a certain point, I will bring your algorithm onto the show and I will evaluate it and I'll turbocharge it. That's kind of one of the things I do. And I do it using very simple methods. I'm willing to help you become successful with your algorithm and your trading. It's an easy thing to do. So Jay, that's aimed at you. If you have a situation where you're happy with what you got, but you just can't find enough trades or whatever that is, go ahead and throw it my way. I'll see if I can turbocharge it. It's what I do. Hippocratic Oath says, I wish I had an algo that would buy military business whenever war broke out. Well, I mean, look, here's the thing, Hippocratic Oath. Our algos are not initially auto-traded, right? They're actually a trading method that you build. It's manually actuated algorithms. So, now like an algorithm isn't necessarily a computer making the decision for you. It's you telling the computer what to do. And until you can pay a coder to go ahead and code it for you, or have a coder that, do it, or you yourself code it, you're going to be making those decisions manually. So you do have an algo that buys military businesses whenever war broke out. You just have a trading account and you have your military businesses that you like, Raytheon, whatever it might be, Northrop Grumman, all that. And then as soon as war breaks out, you make the buy. The problem with this last one is that it broke out over a 3-day weekend, right? So there you go. Although I do think the stock market was open on Monday. So that is actually something that happened. So at any rate, you have that algo. It's just not where a computer does it for you. You just got to go on and do it. So there you go. You have the algo. It is officially yours, sir or ma'am. I think you're a sir. I don't remember. I don't remember having any conversations with you. Curses and drats. Yes, rats. All right, cool. Well, hey, look, thank you all for joining in. Don't forget like, subscribe, do all the YouTube stuff because that helps us out. The whole algo thing, YouTube algos, and then we have the code QR code. You can zap that with your phone on the screen and take you to our website. You can simply type www.algofactory.tech into your browser. It takes you over to us, and you can see what we're about. $49.99 is incredibly cheap for what we do. Our competition charges about 6 times that for less. So, understand that price is not going to stay where it is. We are going to be raising that price. And we do have a specific time. It's actually a metrically based decision where we're going to do that. And looks like it's time to take my trade. So let's go ahead and do that. We're going to move our stop loss a little bit higher to that. Let's see. Hey, all right, good. 06068. Okay, trade is on. And let's determine how far we're willing to go. All right, we're gonna do the rest of this on the private stream. So I'm gonna end it here, and we love you all. See you over there. The grill is on any minute too, so we'll